charts, I want to start with the crypto charts because I know everyone's waiting for those. We want to look at that. It's actually one of the few things out there that's moving big today. So what I'm going to do is I'm going to flip us into the crypto chart. This is the Bitcoin chart. We are having a nice pop on Bitcoin today. Bitcoin trading up about 4.4% on the morning session, almost $1,200 from this time yesterday. Now, basically what we're looking at is a level of support right here, right? So this is very defined, and this is the beauty of charts. It kind of guides you to support and resistance. Notice how the lows right through here are all together at this 26,700 level. That's a very obvious support level. Notice how the highs right here are all at the 28,700 level. That's resistance. Look at the high of today. It was close to 28,700 on Bitcoin. So what this is telling me, and number one, where do I get that resistance from, by the way? But look at this low pivot here from the bull market dip in 2021. It is exactly at that price point, 28,700. So essentially what we're looking at here is that becomes resistance. That's why price is having so much trouble getting through this level. All right, so again, that is your level to watch. All right, meaning you're bouncing here, you're hitting off here, you're pulling back, you're going back and forth. And essentially what that tells us is that the more we hit one way, the weaker it becomes. So the more we hit to the upside, there is a chance that we could break up. I've said that for a while. I said, listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. Again, that takes us back to this major consolidation area right here, as well as all of this over here. Even pre-bull market run up to 60,000, where we then pulled back, or 65, then we went to 69 and pulled back. That's that area right in there. The way I'm trading this, I have a tiny position short Bitcoin at 28,450. I will be adding to that at 30,000 Pierce, essentially. That puts me in a position to be short close to the 30,000 level. If we get above 30,000, and we stay there for a certain amount of time, like a time count, then I cover my short. In general, we want to know what's our end game. When does our thesis fail? And that's what we're doing in this chart. That's how I'm analyzing this chart. All right, next up, let's take a look at Ethereum. Now, Ethereum is kind of interesting here because you're in this upsloping channel, and it's a great upsloping channel. You connect these lows, that's exactly where we hit right over here. You go from these highs, and it goes right on that same incline. Notice the blue lines are parallel. All right, so what this tells us is this is a lot of resistance right here around this 1,850 level. All right, if 1850 does break, and if we get above here, there's a run up to 2,000. All right, the reason 2,000 is key on Ethereum is because it was the highest point right here since the lowest point was put in on Ethereum back in June of 2022. So again, the lowest point was put in June of 2022. The highest point since then was in August of 2022. That's, again, the upside potential. The reason I would be a shorter there is because I'm the type of trader that makes a level break. Otherwise, if it doesn't break and it's resistance, then the probabilities are dictating a pullback. So it's all about probabilities. There's no, oh, I'm always bearish. There's no, oh, I'm always bullish. There's none of that BS in this chart or in any charts that I look at. It's about specific levels. And as soon as you understand that, you become free. You become free to understand that, again, it's all about the odds. You become the casino. You are no longer the gambler. And that's what it is. It doesn't mean I win on every trade. Heck, I put out a video yesterday. I lost 99% on SBNY because the Fed halted it. The government halted that stock. I was in that stock at the time. And it basically opened yesterday at I think I sold it at 58 cents. So again, I lost 99% of that trade. I'm not perfect. No one is. It's all about position sizing. For those of you that are new out there and you guys are focused in and thinking to yourself, oh, okay, think about this, right? You know, I have to make $1 million overnight, or I have to make it by the end of this year. That's the mentality that will make you go broke. Always remember that, guys. It's singles and doubles. You want to get to the Hall of Fame as an investor hitting singles and doubles. You know why? Because ultimately to hit home runs means you're going to strike out. And when you strike out in trading, that means you lose a big amount of money. And that is unacceptable. That kills your account. It basically puts you back to the starting point, and it is not good for your overall health and your financial wealth. Let's take a look right here at gold. Gold's pulling back. Now, gold's had a great run. There's nothing to take away from gold here. You guys know I continue to be a huge bull on gold. But we are short-term extended here. We might need to consolidate a little bit more. After consolidation, is gold going higher? Absolutely. You're looking at a double top coming up. That's your next target at 2075. So essentially what I would say to you, or what I'm saying to myself, is that I am buying pullbacks. If we get a pullback in gold, I'm a buyer of gold. Look at this sideways bullish consolidation for the last 2+ years, the last 3 years. That is amazing. Last year in 22, everyone was like, oh, gold is coming down here. It's not performing like Gareth said. By the way, it still beat the S&P and Bitcoin by a mile. But the key was, look at the dollar. The dollar was up 20%. 20% on the dollar, and gold was down for the year maybe 5%. That tells you huge accumulation. In fact, I did interviews where I said, guys, when the dollar is up 20% and gold doesn't decline by 20%, it tells you big money is buying. Don't be a fool. Follow the big money. There's a reason why big money is big money. It's because they know what the heck they're doing. And my target for the end of this year is well north of $20.75. Should be, again, potentially $2,300. Once we break out above $20.75, that's your play. Look to buy miners on pullbacks. The miners will do really well this year because inflation is coming down. Last year, inflation was 9%. And you know what sucked for the miners? The fact that we saw inflation high and gold price was not going up. So they were basically making the same or less on selling their gold that they were mining, but all their costs were up precipitously. Now, let's be clear on this, guys. I'm going to be extra super clear here. The markets are going to go lower. The Fed has now told us they're keeping interest rates up for longer. All right, meaning into 2024, we're going to see interest rates here. The market doesn't believe them. That's why valuations in stocks are still ludicrous. At some point, we are going to go into a recession because of high interest rate. When we go into a recession, people feel the crunch. They don't spend as much money. They don't travel as much. They don't buy as much. So that means that earnings per share for most of the stocks out there will drop. That means valuations will drop. Ultimately, I have it priced in that the S&P 500 is going to have to come all the way down here, all the way down to this level here. I think we could touch 300 on the SPY this year, which would be around 3,000 on the S&P. So just be aware of that. Bounces are great, but I'm going to continue to look to short rallies into resistance. This is still a bear market. It hasn't proven otherwise yet. I wait for the charts to tell me. I don't tell the charts, and right now the charts still say bear market, both in crypto, unfortunately, until we stay above 30,000. But right now, especially in stocks,